There's
Anyway,
really not that much. There's a bunch that came in this week. I mean, JB's been crushing it, but he also has some pretty awful clients that take forever to sign.
yeah. So there's going to be some. Not for us to solve. There's going to be some. We're just going to learn as an organization how to get people to sign, and there's ways to do it, and there's best practices, and so we just got to get better. Everyone has good intention. Everyone's trying really hard, but we get some learnings to do as an organization and some muscles to develop. So,
Sure.
so anyway, so I called the meeting, so I'll start this one off. Cindy, I need you to explain your the accrual process for expenses that are over 180 days but under 270 days that are specifically in California or New Mexico.
What do you mean?
That's a very direct question.
I'm kidding. Cindy, I'm just kidding.
Okay.
Go ahead, Cindy. That was a joke. Sometimes I'm sarcastic. Not necessarily funny, but sometimes sarcastic. Why are we meeting? What I'm trying to make the connection is Anthony's been helping us to build this thing called AR reporting.
Mm-hmm.
And one of the things that when you do something new, I'm learning there can always be noise. And I'm trying to get all stakeholders together so everyone can be aware of what everyone's doing, and everyone can be aware of what we're doing. And so he's trying to create, and I want Anthony to show us what he's doing and where he's getting the data from, just to keep the finance team informed, and we can get the connections. But what I'm also, two things. I want the finance team to see what he's doing, because it's about AR numbers. We pay commission based on AR numbers. We do some revenue based on AR numbers. And so there's the connections that both we want to be aware of and think about what connection points we need to be having. I think the second thing is just getting well ahead of the curve. At the end of the day, whatever numbers Anthony reports and finance reports, they may look and feel different. They're serving different purposes, but I want us to actually look at these on a monthly basis and at least understand the differences. So I'm getting ahead of the curve, but I just want us to start to understand what each other is doing. And then the third thing I just want to say before Anthony shows things, the reason why I have it as two separate threads is AR reporting is not a financial accounting number. This is where we think the business is at, and it's a reporting number that's not audited. And so I've been having it as two separate work streams just because, Anthony's been pulling a ton of data from Salesforce and slicing and dicing in different ways. But I'm learning that there may be some connections that I just want to expose everyone to. So what is this about? This is about informing the finance team about what the AR reporting is and letting Joanna and Cindy's muscles start to go to say, let me both understand it and let me start to ask questions about it and make connections. And see if things, if you have questions or things we got to be thinking about. So I'll just stop there. All that may be a little nebulous, but I'll just sort of stop there and turn over to Anthony Franco.
All right. So I'll let everyone else adjust, because right now our ARR reporting document is two documents. There's this ARR by month, which is your breakdown, shows your beginning ARR, and then you add to churn your upsells, your downsells, your loss, your winbacks. There's also looks at pending ARR and a couple more tables if you go down that are meant to just show basic metrics. I'm going to work backwards and then come back to this page. So first, I pull from Salesforce a gigantic query that is every single contract that we've ever had. It includes your new businesses, it includes your renewals. If you get a do not renew contract, that also comes in here too, as well as a bunch of other fields that help us do reporting on it later on. So formulas, and then over here, you see MRR by month. Importantly, this MRR is uniform regardless of how many days days of the contract were actually there. What I'm trying to say pretty badly is that, let's say a contract is $500 in ARR. If it was signed on the 31st of the month, it would still be $500 ARR. If it was signed on the second day of the month, it's still $500 ARR. So that's going to be the big difference between the two numbers you might see. So now once we have
I just want to pause there, and I just want to get Joanna and Cindy's reactions to what he said. Does that make sense to you? and why that his number may look different than financial?
Yes, but from 2017 to 2023, those numbers were on point. We never prorated.
Right.
Effective 2024 is when we started the prorating on every single account. Only specific ones were prorated prior years. So
Yep.
yeah, there will be a difference, absolutely, but very minor.
And when you say pro rata, when you're prorating, do you mean? I understand there's a Salesforce report that has monthly AR that's pro rata. Do you mean in the revenue that you're reporting, you're talking pro rata? When you say pro rata, where do you mean?
Monthly revenue that he's showing right there, we were not prorating up until 2024.
When you say we were not prorating,
On a monthly revenue. Annual, we never did because we never reported on AR.
and when you say we didn't, what report are you referring to?
The revenue reporting. So if we broke it down by month from 2017 to 2023, if you
Yeah.
broke down the monthly revenue, it would not be
Got it.
prorated.
So if we looked at the monthly revenue, it's not prorated. What your rule was, if the contract was closed within the first 15 days of the month, you'd pull the full amount in revenues.
Mm-hmm.
If it was closed in the last 15 days of the month, you wouldn't include it in the current month.
It would
It's
go
about-
to the next
Mhm.
month.
Right. So it's not pro rata, but there was a rule of include or not include during the month based on the 15th day of the month. So
Yeah, and there was no intelligence behind that other than the fact that
Yeah.
Bob said, "I don't want to give you a full month credit if it's only been there, if it's only one day." So
Yeah.
that's why we pushed it over. So other than that, there was no intelligence behind it.
Yeah. But from a rev rec perspective, makes good sense. Like
Mm-hmm.
as a sort of simple rule for revenue reporting as well. I got it. And Anthony Franco, so that's in our financials. And as of 2024, therefore, Joanna, starting on January 1st, what happens?
The first and last month are prorated to the day, regardless of whether or not it fell before or after the 15th. It's to the day.
Got it. So it's prorated in our formal revenue reporting, which is different from AR reporting that
Correct.
Anthony's doing. And Anthony Franco, you get that?
Okay, I do. So I understand, right? This will not have any effect on AR reporting since Salesforce will still show one MRR number.
Correct, because going forward, that we will no longer be prorating in Salesforce because it's not. Last year, the number was solely dependent on how the seller was getting paid. This year, we're doing it by ARR, so it does not matter. So we are no longer prorating in Salesforce.
When you say prorating in Salesforce, what do you mean? What field are you referring to, and who uses the field?
All of our revenue reporting in Salesforce used to be broken down by prorating based on the various rules, and it would fall under sales reporting and finance reporting.
Like
So,
is
like,
it
Rajiv-
example here, like this.
Yeah,
or-
so it made a difference on his monthly MRR, months to goal from what he was doing, not year to goal.
Yeah. And so there's something in Salesforce that was a pro rata report
Mm-hmm.
that you used for revenue purposes. And are you using that now starting January 1st? What are you using to do revenues from Salesforce? Are you getting your data? And I think Anthony Calderero is doing it, so maybe you guys aren't close enough yet.
No, I don't. So we're not pulling any revenue from Salesforce. Salesforce is not our source of truth, so we do not pull it from there.
Got it.
The only thing I use Salesforce is I go in for that particular month, and then I pull the information I need for commissions. And then on the opposite spectrum, I was not auditing every month effective January 1, but I'm going to start doing it to the financials just to make sure everything is right. Because once the opportunity is closed one and I've already reconciled it, there's no reason for me to go back and audit it. But now that I knew that people were going in after I closed one and amending things, I can't guarantee that number's accurate. So I think I'm going to go back and audit until I'm comfortable again.
Got
take it forward? So now that we have our companies as well as the MRR that we have each month, we come to ARR by customer. This entire table is essentially a sum if. You have your customer here. Mind you, this file is big, so it takes a little while to scroll from left to right now. And then once I get over to the months of this 45 megabyte document, you can see that what the formulas do, with some rules behind it to include pending ARR and Salesforce pro rata, which we can get to later. It sums the column that you see from the Salesforce query, any active contracts that it has during that month, by the customer. And then once you're done there, it creates a sum total that you see as a monthly ARR. And then once I have control there, because this takes forever, sorry for me complaining. I'm trying to go to ARR by month.
While this is waiting, I have a question for you. So
Sure.
the historical data, I told you a while back that I'm not confident that, because we didn't have all the historical data in there, and we started dumping stuff in to get things rolling. So it's not guaranteed to be accurate. So how far back did you go scraping the data as far as years?
So we go back to January 1st, 2021, when Salesforce data officially started. As well, I worked with Liz to do a lot of cleanup of the historical data, stuff like fixing literal holes in ARR that we had for certain customers, as well as fixing some of the prorating that were simply just there, but really would have been represented ARR as a whole month total. That is still ongoing. However, we have frozen the historical data, and anything that has been caught still in the historical section, we have frozen, and I've written rules on this document to be able to catch that. Stuff like, for example, when renewals roll over, sometimes you have a monthly spike or dip in AR reporting in that meantime before it rolls over cleanly to the next renewal. Similarly, you do see...
Pause. I want to get Joanna's reactions as she's asking questions.
Yes.
Did you take so I had given you the actuals that tie to the financials for 21, 22, and 23. Did you go back and see how close you were to that number?
I ran into the problem of
names weren't the same.
Yeah, the names. Yeah.
Love it. I've been fighting that since 2019.
So it is the next step I really want to do, is just see how close I am. This is for you, David. But once we have this done, and really I think the last thing I need to do is include net dollar retention and gross dollar retention. I'm going to go and create a manual mapping of Salesforce to NetSuite, and then try to reconcile all the data going back to January 1st, 2021.
Okay, I might recommend you hold off on that, because as soon as we integrate, there will be a mapping, so it may not make sense to spend the time, but that's totally up to you. I don't know how quickly you need this data.
That's really a David question there. How long is your timeline, though, on getting this mapping ID in there?
As soon as Liz gives us the go-ahead that Salesforce is fully functioning with the new products and the rate cards, we have a developer, I believe, on standby that is going to do the process. We just need someone to lead the project. So I don't know the time period. Probably not at least 90 days.
Joanna, it's probably 90 days. What is my education? I understand the benefit of Common ID, but what do we? Tell me, Salesforce has an ID for every account, and we're trying to put something in NetSuite that has an ID for each account. I'm not fully following.
So what? Yeah. So we'll go back just a teeny bit. So clients can be called many different names during the course of Sponsor United. They have a legal name, They have
Yeah.
a name that they're called, and then we have this other name that I don't know if it's a nickname or whatever. But if you go on our platform, 9 out of 10 times the name is not the same that's in Salesforce or the legal name. So we, as in finance, go by the legal name. It's just the easiest for us. That's what needs to go on the billing. Any type of formal documentation needs to be the legal name. So that's what we go by. That's why we added the filter in Salesforce. The problem is all these names aren't linked together because the different softwares aren't speaking to each other. So what we started doing when we implemented NetSuite was taking the Salesforce ID and adding it to NetSuite. So there should be a common identity. So eventually when we do integrate, they will speak to each other. We won't have to fill out too many of them, but I cannot guarantee how many are actually completed. I might be able to run a report, but right now they are not linked together.
Yeah.
But that's why we need to link them together.
I'm going to get a little more tactical though. Theoretically, I understand, but so NetSuite has a bunch of customers in it. Salesforce has a bunch of customers. You need a common identifier, so every time a new contract is assigned, it can go to an existing customer and get updated.
Yep, it can all flow. But even
Can all
for
flow.
reporting, it'll all flow.
And until you have that common identifier, and the common identifier that you're looking to implement of all those different variables, what's the common identifier you're looking to implement?
It's essentially a number.
It's a number. Every customer is going to have a number.
Yeah.
Got it. And then
So
every
like
time
Rohan and I did one when we did the Spectrum deal.
Yeah.
We just did 1 through 1200. And then we used that to do like the different reporting and do an ongoing MRR report from 2021 to 23.
Yeah. Okay. Anthony, getting to your point, I think and maybe going back in time, like I just want to, it doesn't have to be perfect. I think I'm just saying that as I just want to make sure the numbers are like, I call it directionally correct, or like close enough. Because this is not what Joanna and Cindy do has to be perfect, right? Like those are financials, this is reporting. And so I think the question I have for this team is there a way we can just eyeball these numbers and go, yeah, if we can look at the revenues and look at this and go, yeah, they're all close enough, they're all within 1 to 2%, I can feel comfortable is kind of where my head is.
Yes. Well, let me ask you, Anthony, if you got the end of year total for 2021, would you be able to see within ballpark?
I think within ballpark, yes.
Okay.
Does it show an end of year number, or does it break it down by month?
It's broken down by month.
Oh, then
It's the MRR I sent you.
I should be able to break that down then. Similarly,
Okay.
I actually have been able to validate these two numbers for December and January by looking at specifically the customers and making sure the numbers align.
Yeah. So that's December. I would probably just take all the monthly revenue numbers that Joanna shared with you and put it against our ending AR and look at the percent difference, and like as long as it's within, a small percentage, we're like, it's good enough.
All right. Do you want to set a number of what is a acceptable percentage?
Yeah, 0%.
What about 0%?
If it's between 1 and 2%, we're probably going to say it's good enough.
All right.
That's where my sort of gut is. I think basically how they handle the revenues in the past, it was that 15-day rule, and so we should be close enough. The only thing that I think would cause you to be different, well, you have noise, is this pending thing that you have in the numbers, because big picture, I'm sort of calling pending is like contracts. I think the way the financials reporting it, they're conservative, understandably, and so when they're reporting revenues, they exclude anything that's past contract that's not in our numbers. So that could be the nuance. So you may have to look at this and go, I'm going to look at it without pending, and so then maybe that's closer, but that's a little bit what's in my head that may cause some noise in your numbers.
I think there might be a second source in there, David.
Okay.
There's also just general Salesforce reporting. We'll call it Salesforce reporting nonsense.
Yeah.
Like, for example, I will pull up Constellation Brands because this was a really great example that me and Liz found. For a minute, everything in Constellations was double counted. They had it at a parent level, and then also all the child levels. This was say 100 companies. They had it all divvied up, so it also equaled 14,708. I've been working with Liz to find these, but these will also lead to discrepancies in reporting, especially when you get closer to that 21 date.
Yeah.
Whoa, wait a minute. There shouldn't be any splits.
Yeah, Liz identified of some of the bigger ones. I don't know if she has found all of them.
Splits do not pull up on revenue reporting in Salesforce unless you put the filter in to make that happen. Because they, way back when, Rajiv wanted to have splits for every single organization within the parent. And it was hard to do that because it's not a 50-50 split between everything. Some organizations could be larger, some could be smaller, and it's not 250 across the board to equal whatever the dollar value was. So he started doing that, and then we stopped doing it. So we pulled off the reporting for splits because they were not accurate at all. So they just were supposed to be at children at $0. So Liz went in there and changed all of them. So if there were some after the fact, I was never able to catch it because I never put it on my filters for reporting. Does that make sense?
That does. I've gone in here and essentially hard-coded over some of the larger ones we found. Like, for example, when this fell off, this was leading to a $200,000 downsell. That was just illegitimate. Like, these numbers should be zero, so I put them at zero.
Yeah, they should have never been split.
But I do think that, David, as we get closer to the date of 2021, specifically Liz, I don't think even came around until this time frame. I think it might need to be closer to like 5 to 10%.
That's fine. Let's just at least see it, and let's at least acknowledge it.
Mm-hmm.
So let's just look at some kind of data top line check as well, and just to know, like, if it's different, I'm okay. Like, what's most important? From January 1st, 2024 going forward, we're like, this is right. And then the history, history may be a little noisier, but it's directionally correct, okay? Or the further back you go, it gets a little noisier, and here's the reason why. Like, it's okay as long as we think that the numbers are like directionally correct, because if they're way off, then it's not telling us the right story. So,
all right.
Usually Salesforce and financials are within 5,000 of each other on a yearly basis.
Yeah.
So I would say you're within ballpark. I would say around $5,000.
Okay.
That's what you expect.
Yeah.
Yeah. I mean, that to me, that's beyond directionally correct. That's like right on. If that's where it comes out to be.
See, that's my problem. I'm not a projection person.
No, you shouldn't be. We're not looking for you to project the financial flows.
I'm not wired that way.
Yeah.
Do you want to talk about pending, David?
Yeah. Give some education, and then did you guys? I would just look at row 14 through 114 through 114 first. Of like, this is the standard way that we talk about what's happened for customers, and I think you were trying to build something as well, Joanna and team. It's like you started. This is what February. You started with 13.294. You added a bunch of customers, 464,000. This is you lost, and then this net churn section is what happened to our existing customers. They either upsold, they either added more money, they either downsold, they're spending less, they're paying less with us. We either lost, they're no longer with us as the lost, or the win back is a prior company comes back to us. And after all those changes, here's what you end up with, and that's the standard framework of how you do AR reporting. The thing that and so when we're doing this each month, the thing where I just kind of ultimately want to get Anthony and Joanna ultimately alignment is when we're reporting how we did. This is from a reporting perspective. This is how I'm going to talk. The financials is going to be a separate conversation because but the 464 where you see new, like, this is where I want Joanna and Anthony each month just like catching up and just going through the data together so we can, because Joanna, you're paying commissions. I think you might have had like 474, and so this is just an opportunity for us to connect each month.
What February was 464?
It was 472, I believe.
Did you add Park Mobile.
The difference was repeat GG specifically because they counted that as a new business and we count that as a win back.
Ah, that's excellent. You brought that up. So the definition of a win back is very gray. If they were a customer prior, regardless the length of time, someone would say that's a win back. If it's after a year, it's considered new business and it's not considered a win back to others. So that would be great if there was an actual agreed upon definition for that one.
So two things. The definition that you're using, Anthony, is what?
The definition I use is that if there is ever a month where there is 0 MRR for them, then if we get them back, that's a win back, which now means 3 months because that's how long we hold anything pending for.
But what if they pause, or if we give them a comp month? Like sometimes we've I'll think of the name.
Can you elaborate more?
The cut. We've comped them
The-
a couple of months here and there for referrals or whatever.
Let's go to what the cut looks like in MRR. I don't think that showed up as a win back. Like, would you have seen a dip to 0 in MRR?
You should. I'm pretty sure it was Brad Cutler. You should have gotten a break. Here, I'll pull up mine.
Yeah. Okay. Liz thought. I remember there was something that Liz had told about how if we were giving them a free month, we would put that as the beginning, correct, Joanna? Where this would be a month of 0, and then it would be like $399. Like if you wanted to apply a discount per se.
No, we take it off the month they're not paying. We don't prorate the new rate and then spread it out with a discount via MRR, solely because the seller was making a specific dollar amount each month in commission.
How could you send me over what it should look like on Salesforce?
Yeah, let me pull. I could do this offline too. I don't want to waste anyone's time, but for example, if we just got to keep in mind that if we are to comp, we don't do it that much anymore, but we have comped in the past. If we comp somebody a month for whatever, or give them a break. Mary actually gave someone a few month break and they're starting up again. I got to research the name. That shouldn't be a win back because we're doing it on our terms.
Yeah, so right now this is the formula and this can be updated. But after we went through and did pending, I put it to 90 days. So if there is ever a pause for more than 90 days in MRR, it's put in there as a reactivation.
Okay, that's your choice. I just think that there might be. I think your definition is different from everyone else's.
That is a definition that has still been left somewhat nebulous. Or at least we haven't had every single major stakeholder agree on what a reactivation definition is because there's money attached to it.
Well, let's distinguish. There's different things. I think for AR reporting,
Okay.
Commissions is different. So let's, for AR reporting, I think we said any customer who's come back, regardless of time, is going to be treated as a win back.
Yes.
But does it need to be closed lost or a gap in MRR?
Well, there's no need for it to be closed lost at this moment for something to appear as a win back.
Yeah, I don't know what a gap in MRR is, but if it's a gap in MRR, is that by default a closed lost or
No, like a month pause. Like we didn't lose the client.
Oh,
They're still our client, but we're giving them a free month.
we're giving a free month, and so when you say just one free month, or like they just signed a new contract and we gave them one free month in a annual contract. Is it the latter?
We've had 2 instances where somebody has done the full contract, and then at the end of the contract they said, well, I referred 2 people during this term, I want to be compensated, and Rajiv throws them a month or 2 months for free, and then they start their next term 2 months later. We've had another instance where we didn't do right by the customer, and then Mary gave them a break of 3 or 4 months, and then they're coming back. So they didn't close lost them. We didn't lose them as a customer, but we gave them a break in time for whatever reason, in good faith or whatever.
Yeah, so Joanne, just contractually, let's take the Mary's example. She gave them 3 months.
Yeah.
When the contract expires, did she sign a new contract for a year?
It was mid-contract, so I think they did an amendment, yes, and they extended it.
They did an amendment. It's basically we can extend the contract by 3 months and not charge you.
Pretty much. So, but it's midterm. Yeah.
Yeah. So they did a contract amendment. And so revenue. What do you do for a revenue? Let's go to the revenue, which is not AR reporting. What would you do from a revenue?
We do not record revenue for 3 months. That period of time, because they're not paying for it.
Yeah. I think how I probably would have done it previously, if that happened. Let's use the example of paying $120 $120 a year, so $10 a month, and they're halfway through the contract. They still got 6 months to go, and we just signed a contract to give them 3 months, so then now they have 9 months to go. So I would have taken that 60 from, I think how I probably would have done it from a rev rec perspective, I would have taken that $60 that's left, divided it over 9 months, and therefore I'd have
shorten the revenue for the remainder of the period.
I would be lowering the revenue, but I would have that go up for 9 months. So I don't know, instead of $10, maybe it comes out to be $8. That's how I would have done it in the past. Because I think that's really what's going on. But I'm not gonna suggest a change in process. That's just how I would have done it beforehand.
Okay. No, I'm just asking the question because I didn't know how it was reported on here, and I know that the definition of a win back has always been a hard thing to digest because nobody would agree on an actual definition for it. Because then it plays into, is it new business? Is it recurring revenue? What's the deal here?
Yeah.
And it just gets chaotic.
So let me tell you what we should be handling, and then there may be some monthly manipulation each month. But from a win back, the rule of a win back should be a customer that's left us and came back, regardless of time. This is for ARR reporting.
No, I understand.
So commissions we may have a different rule for commissions, but for AR reporting. And then, and Anthony, we wrote that rule out in your win back definition, correct?
Yes, we did. Here's what back definition.
So Anthony's been building out definitions for AR reporting, which is different than financial reporting, but yeah, so this is regardless of time. I'll jump to the next one, but cool here so far, Joanna?
Yeah, so you wanted an example. Go to Atlanta Sports Council for June of 23.
How do you spell that, Atlanta?
Atlanta.
Oh, Atlanta. Okay.
Yep, Sports Council.
I don't even see them on here.
Chick-fil-A.
Chick-fil-A Peach Bowl?
There you are, Peach Bowl. Yep. So go to June 23. We comp them 1 month.
Still see it on here.
Okay.
June 23, you comped them 1 month. Through July 23 was basically free.
The entire month of June was free.
The entire month of June was free. Got it. And so someone signed there was a new contract modification.
Yeah, and then the new rate started July 24, $449.
Got it. So everything should be in a contract modification. So that sounds like that's happening, which is most important. Because there shouldn't be any handshake deals. So if there's no handshake deals, everything's contract mods.
And let me tell you, they get pissed at me about it, but I make sure that it's documented via contract or verbal, an email confirmation on both parties. There's got to be something.
Thank you. You get the pain in the ass CFO who supports you, and if you have problems, let me know.
Thank you. Yep. No, I get. Trust me, they were pissed at me for a long time about begging for contracts, and now we've gotten to the point where we put it in invoiced because if I don't have a paper trail, it's not going to hold in court.
Yeah.
Nothing.
Cool. Yeah, very cool. Yeah, every conversation needs to be documented. Very cool. Thank you for doing that. And any problems, let me know. And I can be the bad guy. And so then we get to Anthony Franco. How do you report it? So go back to Salesforce. What does Salesforce show? I mean, these are like one-off use cases. It sounds like two. Like it's not. These aren't like big problems. It sounds like it's one-off, and it's not going to be a huge change in the numbers. So however we handle it, it's not going to have a huge impact. But it sounds like in this case, Salesforce put 449 in July.
That's correct. There was a new rate change, new contract July.
Yeah,
June was a comp month, and May ended the term.
I'm fine with that. It's
Okay.
There's one or two things, small noise. It's fine.
So
I would say if I wanted to be completely accurate, I would say we should take whatever they're paying for divided by the number of months, and so it should be a little less than 449 is ultimately what we should be showing for AR reporting and revenue, because that's truly what's going on. Does that make sense?
Yes.
But I'm not, Anthony, does that make sense?
Yeah, it does.
Okay.
Oh, I see. So then Liz went in there and changed the date to 6/30 because there was a month gap, and added the revenue in Salesforce to mirror that.
In that case, you would have seen.
That's why it was changed. Okay. Now I understand. She's like, we made a bunch of changes that were wrong. They weren't wrong. It's just. Okay. You're doing it for a different reason. Again, it doesn't matter to me because we don't use historical data in Salesforce. So if you need to amend prior to 2024 to do whatever you need to do, that's fine. 2024 cannot be touched because that was scrubbed.
We will be on the same page. Like we can go back forth every single month then and just make sure every single company, and honestly, we should agree on 95% of them. There's just going to be a couple edge cases here and there, and we can figure out how to report them.
Okay, perfect. Yeah, that's what I told Liz. I said, if you have any questions on 2024 deals that you do not feel is correct in Salesforce, please let me know. Do not change any of the closed won accounts because that impacts revenue and invoicing in NetSuite. And once they integrate, they're going to speak to each other, and it's going to cause chaos if a bunch of people are changing things after it's closed won. So that was my biggest concern when I talked to David. I don't remember this morning.
Yeah.
Which ones? I think she actually inadvertently gave me a list of all the ones that have been changed from something to close one.
All the one she said she didn't touch anything for 2024 yet.
I don't know if any of these are for 2024. Actually, it looks like a few of them, but these were.
Oh, no. Okay. Is there any way I can have that list? Or just the 24 ones? I don't care about anything else. Yeah. I have to go in and I have to make sure they match the financials now because it looks like she changed the entire contract to did not renew, and it was supposed to be a partial.
Yeah, I'd be happy to.
And that would impact the financials.
And there might be some that are invoiced too. Do you want those as well?
Yes, please.
Okay.
Anything that would impact 2024 revenue.
Good to know.
Thank you.
As soon as this call is over.
Thank you. Mm-hmm. I'm sorry I did not know that. She told me it was just 2023 and on, like historical data that was changed.
David, what did you want to talk about next?
I'm good there for a couple things on that last one. The way you handled it in the past of that free month and you kept it at 450, that's fine. I think what's mostly in my head is this is good enough for the history. What I do want to do is every month, starting this month is March, is just actually go through everything with Joanna as well and you, and literally look at the new, look at the upsells, the downsells, the loss, look at things and see if there's anything that looks funky, and if we have to make any sort of edits from an AR reporting perspective. So that's just the cadence that I want all of us to get to.
Naturally. Do you want to set up a time? So Rajiva's let me know that there is a certain amount of time that things are held in limbo right now between Salesforce and something they put to new contract. I don't update anything for March 2024 until I believe it's going to be 2 business days after the end of the month. As a result, would you want to meet on like the third day and we can look at the numbers and see what works and what doesn't? Too busy?
I gotta close the month. You gotta give me 5. Give me so the best time to actually talk is once I have the final numbers in hand, and then we can go over everything. So my suggestion would be April 8th, first thing on Monday morning. We can probably connect, because that would give us the time to close. I'll have the month end close for numbers for March. I'll have anything that was changed and audited for February. And I think that might be the best time to talk.
Okay, Cindy and David, do either of you want to be part of that conversation?
Yeah, I'll be part of it.
All right, I'm going to set up a time from 9 to 10 o'clock. It's just a work session for us then.
That works, thank you.
Yeah, we'll start with that. We may tweak that process at some point, but let's just at least start there.
Okay. I just thought for first time you would
All
want
good.
the actuals.
Yeah, all good.
Okay. It's just less confusing that way. But I also need time to figure out what was changed and change back if it's necessary. That's my biggest concern right now. I don't know how much was impacted.
Yeah. Joanna, I was just actually I was looking at how people handle when you give an additional month of a contract.
Okay.
And it looks like revenue recognition is generally you extend the revenue over the total amount over the full life of the contract rather than just giving. So that looks like it's most common. So for example, if you do what I've done something in the past is like 12 for 13. 12 you pay for 12 months, we'll give you a free month, so it's really for 13 months. You take the revenue and divide it by 13 months. And it looks like that's revenue recognition. So I'm not going to recommend any changes, but I'm just telling you, it looks like that's probably best practice.
Yeah. So right now we didn't do that in prior years because the way that the commission was built. So that's why we couldn't do it that way.
Yeah.
But I don't know, for ARR reporting, Anthony's going to be off because he's adding that same total and just extending it, that same MRR, just extending it one more month. So that's going to be higher than anticipated.
Yeah. Yeah, no, he's gonna be higher. I was taking in 2 separate streams. Like,
okay,
the end of the day, what I think should happen, and I don't actually, I don't want to make any recommended changes to how you guys are doing revenues, but I think I'm talking pure financial revenues. I think the ASC 606 guidance would probably tell you to spread it over.
Yeah.
The new period. I think that would be the guidance. So I would just put it on your placeholder for something else to revisit at some point.
Okay, so one random thought on that, and this is just like thinking way out of the box. How would that impact, because they're still looking at monthly revenue for a rate card. So how would that impact them when they're seeing now a dip in the monthly MRR? And then they go so instead of going from 416 a month, let's just say it's 400 a month, and then they're going up to 466 that following term.
Yeah, I think tomorrow or some point I don't even know what the rate card is or what it looks like, and so maybe we can just save that for the next discussion.
Okay, because I don't want that to impact any, increase in rate cards or retention issues because of the.
Is a rate cards in Salesforce?
Yeah, I don't really know too much about it yet either.
Okay, because I don't really understand. I'm talking purely from a accounting revenue recognition point of view.
Yeah.
And then I'm trying to keep the AR is not like that is like as you said, that's precise. And so the way Anthony has it is fine for now, but at the end of the day, what I think should happen is his AR reporting should actually be exactly the same way, because that's truly what the AR is. He should put that new number is divided over the free month, and that in essence in those two cases, his AR would go down a little bit once that new contract was signed.
Okay.
So that's what I think should happen. The reason why I'm just not pushing that is because we just get it's too complicated. It's too complicated to go down that point. To go down that path at this point. I'm like, we're sort of good enough, but that's something to revisit.
Mhm.
So
Okay.
that's where my head is.
Yeah, that's fine. I just wanted to share the difference. That's all.
Yeah, for sure.
Okay.
Because I'm getting to thank you. Because at some point that one shouldn't be noise. We should end up being the same. But I think we gotta revisit the accounting potentially at some point, and then we can revisit the ARR approach at the same time.
Yeah, and again, I don't know how sales uses, because if they break up that ARR by 13 and you get that rate,
Yeah.
they would probably just break it up by 12 to get their rate card. Because it all flows in with like I said, the retention and all that. If you did year-over-year retention, you're doing off of a monthly revenue.
Yeah. He's going to do the retention is going to be off this data set. So this data set, just like you do, but it's going to be formally off on this AR data set is what he's going to do the formal AR retention reporting. The net dollar retention, the gross dollar retention is going to be off these numbers.
Yes.
Pause, Joanne. I see a face, and I'm not sure if you're thinking, reacting, or if you're like, oh, okay.
I'm just used to being questioned why the retention number isn't matching the financials, the final number for the month.
Yeah, and
if you're basing it off of this reporting, you're obviously looking at that reporting in a different light because it's going to be more or less a guide to where we are as far as retention is concerned.
Yeah.
Okay,
yeah.
I get it.
Yeah. I'm trying to break the two things and go. This is financials. This is how we do things. This is GAAP. This is here's ARR. Let's all agree to the rules. Now let's do the retention reporting, and this is how investors, are going to ask to see this document.
Okay, so they're not going to tie it because Spectrum was big on your retention report does not tie to the financials.
No,
so we're not worried about that.
You're gonna have to. You're not gonna have to explain that.
Okay.
We're gonna get everyone comfortable with this AR reporting. Here's the rules. Here's how we do it. Here's how we include pending, and then all the percentages and calculations are gonna be based off this.
Okay.
Anthony, just give a quick update on what you're doing for pending. Just how you're including that.
Yes.
What the rule is.
So for pending, because some contracts expire, but our sales team and client solutions team is very certain that they will renew, we have included some rules around there so that they can count that towards ARR. The rules in that are defined as something that is out of contract, something that is labeled in Salesforce as pitch 90% of pending signature. And the reason why it's specifically those three is because when we did statistical analysis, anything that was labeled as those three had over a 90% chance of renewing. And that's where you get the third thing for. Once something is in that bucket, we will include an ARR for 3 months before counting that as lost. And if something is labeled to anything else out of contract, it immediately goes into lost. But therefore, as a result, this number you see here is going to probably be a couple $100,000 higher than what you would expect if you were just looking at active contracts. And if Debbie is managing this with her new goal, we expect this number to trend towards zero. But currently, it's somewhere around 500,000, and this is where it was at the end of the month. And all of these are active outstanding contracts as of March 1st. And if you want to look at them, I can pull up the list. I have it.
So are you using this report? Sorry, so many questions. These reporting is obviously a guide to, how the progress, client service is making, what they need to put attention towards, progress to goal for the year, that type of thing. So if, from a detailed perspective, if Mary wanted to know are we using these numbers to solidify their bonus at the end of the year? That's what I'm gonna ask. That's the best way for me to ask.
Good question. So let me tell everyone what's going on with bonuses. They have no bonus plan right now. I want to implement the bonus plan. When we implement the bonus plan, it's going to be based on these AR numbers, and we'll probably do some retention calculations based on these numbers.
So it's not going to be, their bonus is not going to be based off financials. It's going to be based off of the reporting.
Correct.
AR reporting.
Correct.
Why?
Because these are the official company view of where we are for ARR, which differs from financials, right? The financials have, you do daily rev rec. This is not daily rev rec. We're including pending in here. You're not including pending in there. So this is like our view of where we are for ARR, and we all, with all the changes.
I really don't understand, I guess.
Go ahead, push.
So they're going to be paid off of a projected number? Sales is paid off of an actual. So why would client services get paid off of a projected?
Well, the question is, what are they going to get paid on? And most likely they get paid on a calculation that's like, net dollar retention.
Yeah.
But two-part answers. This shouldn't be that different from. This is our view of truly where we are with AR. That's the punchline. Like this is our view where we think AR is.
Okay. So if there's a $5,000 gap between the actuals and Anthony's reporting, and Mary's team made it by Anthony's numbers, but not by the actuals, you're going to pay them out because it fell under the.
They're never going to see the actuals. Like you and Cindy and team, you're going to be saying, "Here's our financials." That's a completely separate conversation. The only data that they're ever going to see is this AR reporting, and everyone's going to understand these rules. The whole entire company is going to see this. The whole entire company. This is how we're going to talk about performance. People are not going to see revenues. It's adding too much complication. We're trying to say, here's where AR is. Here's how we're doing as a company.
Okay, this is a really big twist, so I'm trying to absorb it.
Yeah, no.
So Anthony and I, then we need to be in sync, because if he's not within ballpark of the actual numbers, then there's an issue.
Or there's either an issue, or we're just like, he missed something, you found something that he missed, he found something that you missed, or it's a difference because
somebody went in there and made changes that shouldn't have in Salesforce.
Made changes, or he characterized something different, or there's a screw up. So yeah, that's the benefit of, even though the numbers will be different, that's the benefit of just doing a check, because you're going to make him smarter, or he's going to make, you may have different numbers, which is okay, but that's the benefit of the check.
Okay. Sorry, I've never in my life paid someone based off of a projected number. They always match to financial, so I'm absorbing this. That's all. I mean.
Yeah.
Okay.
Yeah, I mean, the difference is the comm structure. I mean, when it comes to new logos, like that's clear. Like there's no, like that's like, did you close a deal or not? What's the amount? Like, that is, when you say actuals, like that's all based on actuals. These net dollar retention numbers, like there's some, like, we got pending in here, so yeah, it's a little noisier, but the compensation structure isn't the same as sales. So, but I'll just sort of stop there. But yes, that's what we're doing.
Okay, so that's that. I guess this is where I really encourage that nobody amends anything that's closed won unless it's finance. If we're
Yes.
putting a lot of expectation on this report, that certainly needs to change, because you can't have someone in that department having the ability to make changes to revenue when they're getting graded and or paid on it.
Yeah, 100% agree. That's why you owning closed one. That's why you owning closed one and being like, here's the official record, like fine, and then we pull the reports from there, and he does some adjustments for pending, or we may do some other adjustments for a free month, and how do we handle in his AR reporting, not from a revenue perspective, but yeah, you're exactly right. That control is incredibly important for both AR reporting and financial reporting and our financials.
Okay. All right, that makes sense now. Why Mary was so hyped up, I just had no understanding. Okay.
And Mary's getting hyped up because she's thinking about compensation.
That's usually where the mindset goes. Last year it was a big compensation issue, and it carried on for 2 years ago. It carried on till probably March or April of of 23, and then last year there was a lot of noise too. So
it hasn't ended, Joanna. I'm on my calls before. My first call with Mary, I'm like 3 days into this thing. 3 days into the organization, they said, "Hey, David, can you hop in this call? We want you to hear the discussion." And then I don't even know what the hell the conversation is. And then Mary goes to me, "How's this going to impact David? How are you going to how's this going to impact my commissions?" I'm like, what the hell you guys? But every day, I've probably heard this like commission conversation for like I understand why, but like probably every week since I've been here.
Well, from an outside perspective, you should not alter daily business to determine whether or not you're getting your bonus.
Yeah.
Like a perfect example is the ARR calls that we're having. Her one comment is, well, if we write this off, how does this impact our retention? And it should not matter. If the client never used the platform, or if we did not onboard them, we should not hold that as a closed one. End of story. Like, it's just, you're never going to win in court. We didn't give them access to the platform. It does not matter. We have to do right by the customer and do right by ourselves, because we're giving ourselves a disservice.
I have a question there, Joanna, because this has happened before.
Mm-hmm.
Let's say that we signed them in January, and I don't exactly know if this has ever happened, but let's say they were supposed to pay and they never did, and we cut off access after 3 months.
Mm-hmm.
Do we recognize that loss in April, or do we recognize it in January?
We will recognize the loss as soon as, so if they never paid, we will reserve the revenue from that point on, and then we will take them to court, and we'll see how much money that we get from them. And then if we bring back money, we'll go back into Salesforce and total out what we've been paid out of, because that's technically the correct amount of revenue we've received. If they started paying us and they stopped, we record the revenue through the point that they've paid. So that's pretty much the key factor there. Some of the stuff that Mary has mentioned about reserves, we have not yet reserved in the financials, so we're not going to do it in Salesforce because they need to stay eye to eye. And as soon as we reserve it in the financials, then we'll reserve it in Salesforce. So that's why those meetings are important, because that's when we go in there and we make the determination. So like, as soon as we reserve it, I fill out, and this is the big pain in the ass. I wish I had a secretary. I'm doing them now. These letters, demand letters, telling you basically if you don't pay in 5 days, we're taking you to court. So it's a big process on reserving revenue. It's not something that can happen like in 30 seconds. And Mary understands that, but she likes to have everything like immediate and fine-tuned. And again, her vision is goal and bonus.
Yeah.
And it shouldn't be that much pressure on that kind of number. It really shouldn't. It should be like, okay, we're off, we have $700,000. Who gives a shit about the bonus? what are we going to do to reduce that total? Like, what can we do as a team to get that number down? And
Yeah.
that should be the focus. What's best for the company, but.
Joanne, I think I'll go back to Mary's thing, but I think, Joanna, I think you were telling me this morning, when you
Mhm.
think a customer isn't going to pay, do you do anything in Salesforce?
Once we reserve in the financials, we go into Salesforce and we amend the opportunity.
And what do you call? Would you change the flag to something called what?
I will reduce the you can't, there's no like Salesforce flagging like we do for allowance for doubtful accounts in the financials. I'll go into Salesforce and I'll shorten the subscription. So it stops recording revenue the same time the financials do.
Got it. And so Anthony, what goes through your brain hearing that?
What goes through my brain is that, one, I don't think that after having this conversation that Liz should have the ability to change revenues in Salesforce. That should be owned by Joanna, and then I should hold Joanna's data. As a result, our ARR will always be the same. And the second question is, I guess I just gave an opinion there, is that let's say something was lost in April. How do we report January ARR if we want to freeze historical numbers? Like, once January ends, we don't want to touch January anymore.
You're just going to put it as a closed loss in January and in April.
April, yeah.
It is what it is.
So we still.
And that's why that's different.
Source.
That's different from revenue. That's going to be different from revenue. Like, that's not how Joanna's going to be managing it from a revenue perspective.
All right.
So you're going to do.
Did you get that, Joanna? And then I just want to go back to the Mary conversation. But
so you're going to go ARR from January, February, March, and April, and stop the ARR in April.
Yeah.
You're not going to reduce the ARR to 4 months.
He has a hard stop. He's not going back in time and changing anything.
Gotcha. Okay.
And so, by the way, Joanna, all this stuff of like Mary coming to you and saying, "Did you reserve it or not reserve it?" Like, those conversations should end. The only thing, she shouldn't be talking about you. Like, you shouldn't have to have these conversations with her. This ARR is the number we're all going to be talking to as a company in terms of how we actually doing.
Okay. Yeah, because if she notices it's not in Salesforce, well, from what I was told as of yesterday, she would just tell Liz, and Liz would make the change, which I don't believe the changes are correct. Like I said, I'll go in there. It's fine. They might be. I just got to check. But yeah, she likes to have things real time, and unfortunately, sometimes there's a process. And I know it could be frustrating, but it's done for a reason. And it's basically just to keep everything in sync. And there's a check and balance that Cindy and I do, and it's annoying and it's paperwork, but we have a trail and we know what the right number is. And if we did not have that, the financials would be all over the place.
Correct. And the financials feed the AR reporting, but correct. And so, yeah, you should be the owner. So you should be the owner for that changing of the flag as well.
Okay. Yeah. So if there's an issue, they'll chatter me, and then I can go in there and take a look at it, and I'll let them know whether or not it's right or wrong.
Yeah.
I just found out that since Liz had changed it, all my chatter emails go to my spam. So I've now reversed that, so I'm able to go in there now and read chatter.
Okay.
So we're good there, and I have a meeting with Liz tomorrow to go over, like, fine-tune some of this stuff.
Yeah.
Because she seemed pretty frustrated yesterday when I asked her, because something that she had changed wasn't right, and I said, well, I thought I was the only one going in there to change close one. She goes, no, there's a new process now. And that's when I reached out to you, and I'm like, what is going on here? Nobody told me anything.
I'm wondering it's funny, like, if I created, just hopefully, I might have just, by me trying to do AR reporting, and, like, I might have created more noise, which wasn't my intention. And so, Joanna, at the point, I just sort of, I always like finance being like, here's where the numbers are. So that's why I like you kind of on point.
Okay. Well, thank you for clarifying this. I did not understand the